Hello, in this lecture, we're going to define the term assets. According to Fundamental Accounting Principles, WILD 22nd edition, the definition of assets are resources a business owns or controls that are expected to provide current and future benefit. Most people, when thinking about assets, know that they're going to be resources and they are owned by the business. The key thing here we want to focus in on is that it's for future benefits. The difference between an asset and an expense often comes down to the timing. If we have an asset, that means it's going to help us generate revenue in the future, revenue generation being our goal. That being said, let's take a look at some examples of assets. The most common asset that comes to most people's mind will be cash. Cash is also one of the most confusing assets in some way because cash is so liquid that we often equate it with revenue, meaning we often equate cash with the goal of the business, which is to generate revenue. But remember that cash is going to be different from revenue. Cash is an asset because we have it in the business in order to help us generate revenue in the future. If we're not reinvesting that cash or we're not looking to put that cash to use within the business, then we should distribute that cash to the owner. It shouldn't be in the business. It should be distributed to the owner. If we have the cash in the business, then we're hoping that that cash will be used in the future to help us achieve our goal, that goal being generation of revenue. Other types of assets are going to be something like land, where it's clear that that's going to be a long-lived asset. It might be helping us generate revenue today, but it's definitely being held in order to help us generate revenue in the future as well. That's why it's going to be an asset. We can have an auto, again, that auto being a business auto, helping us to generate revenue possibly today, but it's going to help us generate revenue in the future as well. That's what really makes it an asset. A factory is going to be something that's going to help us generate revenue in the future. That's why we're holding on to it. That's why it's an asset. Something like ink might be supplies. Supplies are something which technically we should put on the books as an asset and then expense them as we use them. They're going to help us generate revenue in the future as well. Now, in practice, there might be a dollar amount where if it's less than a certain dollar amount, it might be immaterial and we might be expensing it at the time of purchase. However, under a perfect accrual world, we should be putting it on as an asset and expensing them when we are using them. We have equipment. Obviously, those are going to be longer lived assets. The reason we have the forklift is to help us generate revenue in the future. If we have phones or computers or tablets, these are other items that are long lived. We have them for business purposes in order to help us generate revenue in the future. And of course, a building is going to be something that's going to be long lived. We might be using it today. We might be doing all our work in it today, but it's an asset mainly because it's going to help us generate revenue in the future as well.